It's a paradox around capital flows. India is attracting billions in foreign direct investment, but it's losing even more. The latest RBI figures show that in FY25, net FDI nosedived a staggering 96% to record lows. In fact, it amounted to just $353 million compared with $10 billion in FY24. Why has this happened? Because even as the likes of Temasek, TPG and KKR brought in billions of dollars worth of private equity investment into India, other investors such as Hyundai Motor Corp as well as foreign investors in Vishal Megamart and Swiggy divested stakes in IPOs or pre-IPO deals. What's more, Indian companies such as Vedanta, L&T, Sun Pharma, Biocon Biologics and Tata Steel invested in their existing businesses or in new ones overseas. And that led to capital outflow. So all three factors together led to the 96% plunge. In this episode, we try and decipher if this is good or bad news and explain if India is becoming an exit market and not a destination. We try to decode the flight of patient capital, the IPO-fueled repatriation rush, and what it means for India's investment story. It's Tuesday, the 27th of May. I'm Anirban Chowdhury. This is the Morning Brief. I asked my colleague and veteran RBI tracker Gayatri Nayak the first question. Is this good or bad news?
See, on the face of it, it looks like net FDI falling to a couple of $100 is bad. But this is against the backdrop of 86 billion inflows, which is a good number. It's more than 14% rise over last year, gross inflows. There are two parts to it. The one is gross FDI and net FDI. Gross FDI has been reasonably good at 81 billion, which is about 14% higher than last year. What is significant this year is a record repatriation of FDI, which is sort of trimming the net numbers. About 49 billion was taken out of FDI, which is essentially repatriation of profits, capital appreciation, and maybe some FDI pullout. And over and above that, there is increase in overseas FDI by Indian companies. That's also another record 29 billion. So together, it results in a very, very small net FDI inflow of into the country of less than about $1 billion. So in terms of Forex impact, about 81 billion has come as FDI, but about more than 80 billion has gone back in different forms. But they are not bad.
Is this trend unprecedented?
Yes, this trend is unprecedented in the sense that we've never had such a low net number. FDI as such has remained not too hot for the last 2-3 years, and we are seeing it in Indian numbers also. But what is so significant this year, that is FY 24-25, is the record repatriation of investments. That is maybe the correct way to put. So it is also, a lot of it is also PE exits, but not all. And according to RBI, this is a sign of a matured market. So it is a signal that India is a very attractive market for foreign investors. Another thing that is significant is it's a record 29 billion FDI outward from India. This again means that Indian entrepreneurship is being recognized and accepted globally.
Can you cite a few examples of the biggest exits, especially thanks to the IPO boom?
Yeah, see, one of the biggest is Hyundai. They managed to bring down their equity stake from 100 to 82%. And that is reflected in the numbers. Another is Swiggy investors made a lot of money. And then their BAT, British American Tobacco, also invested, pulled out their ITC, pulled out their money from ITC. That also is a huge number, which though the deal happened in 23-24, a lot of money is said to have gone in 24-25. So these are the major exits which gets captured in these 49 billion.
Understood. And what about examples of Indian investors taking dollars out,
Yeah,
basically
see, one
investing
of the
abroad?
yes,
Hmm.
yes, one of the biggest is Vedanta put investing 1 billion in their subsidiary abroad.
Hmm.
And then there is Sun Pharma investing in its Dutch subsidiary about 823 million. Then there is Biocon also investing. It's more like a guarantee to their UK subsidiary. So these are the
Mhm.
big ticket names. And besides these big names, then there are some media MSME kind of investments, mostly in global supply chains. So that is a big avenue for Indian investors post COVID, where supply chains is emerging an important business avenue.
To understand what all this means and the impact of it, Gayatri and I spoke to noted economist Indranil Sengupta. Indranil has been an assistant advisor at the RBI, an economist at Kotak Securities, co-head and economist at the India research team of Bank of America and Merrill Lynch, and the head of research at CLSA. He's now a professor at the Shiv Nadar University. So let's start with your initial thoughts on the FDI plunge.
So I think that, this fall in net FDI this year is largely because of a rise in outward bound FDI by Indian companies. We are going to see a two-way movement, both in, FDI will come in and, obviously Indian companies will also want to scale up. So, there are going to be swings year to year because FDI at the end of the day is always a bulk deal.
You say it's a bulk deal as such, but if you were to speak specifically of private equities or in isolation and of Indian entrepreneurship being accepted overseas, so how would you look at these two separately?
So I think, not only in India, but all over the world, there came, all these new companies and private equity came in to invest in them. So what has happened is that as these companies have grown, they have listed, some of the private equity players have also taken their profits out. Now, again, unicorns don't bunch up like this all the time. So I think that the role of private equity bringing in FDIs, quote unquote, is going to be more limited as we go along. Indian companies are, expanding in various ways. Some of them are acquiring companies abroad which have their own businesses. Some of them are acquiring companies which help them in their exports. So, in the net, both from a perspective that there will probably be a lesser gush of FDI in the form of private equity, as well as greater outbound FDI. I think there will be this twin pressure on FDI as we go forward.
Right. Now, let's talk about gross FDI. That has seen an increase, of course, but one point is that 60% of it seems to be concentrated in four sectors. Do you see that as a narrowing of India's FDI story?
So I think it's always been this way that most of the investment in FDI is coming into services, software services, and financial services. If you look at the long-term trend, the Indian economy is also shifting more and more towards services. So this is pretty much in alignment with that. That's point one. Point two is that, a lot of people do talk about what are India's deficiencies in attracting FDI.
Mm-hmm.
Given the international environment that we are in, I think most of the MNCs have stressed balance sheets, and they will not very easily want to take up new greenfield projects or projects with a long gestation lag. Secondly, if you look at JVs, somewhere down the line, I think there is a feeling that Indian promoters don't want to remain in JVs once the basic purpose is done.
Okay.
Thirdly, if you see competition in India is very intense.
Hmm.
Almost in every sector, there is a local player, right?
Hmm.
And therefore, the MNC has to come and compete. And then in India, there are many distinctive tastes, distinctive features. So it's not like, I think if you manufacture in China, it's easier for you to export to, at least to the ASEAN and so on. It's not easy to find a product which will sell in toto, both in India as well as in the ASEAN. So I think there are a lot of factors that are playing out that prevent manufacturing FDI in any big manner right now.
Understood. But do you see that changing now, with the focus on industries such as semiconductors, with companies like Apple, for instance, coming in and expanding into India, and that creating a lot of allied industries as well? Do you see the split between manufacturing and services changing?
See, these are not particularly GDP generating sectors. The value add from these are relatively less. The employment potential from these are relatively less. Also, I think what has happened is that in the past, FDI coming in meant that there was massive technology transfer alongside.
Hmm.
Now, if you are an Indian company, you can buy the technology without getting a competitor in, because the technology, often belongs to a different company. And both the Indian company as well as the person coming in with the FDI are, buying the technology from a third party. I would think that, if especially also if you look at China and so on, most of the recent FDI is taking the nature of outsourcing. So, in a way,
Right.
you can say that the outsourcing is happening for manufacturing to in China. And similarly, outsourcing in this form of services is coming to India.
And what about changing trade agreements between countries and the increased protectionism that is happening in a scattered way that we are seeing? You think that will have an impact on global FDIs as such?
Yes, but then we have to see what finally happens, because as you know that this is a very volatile thing. One day there are tariffs, the next day there aren't. So I think that no one is going to rush to change their production systems until there is some clarity on what the new regime is. Because you see, a policy can be changed, and it is getting changed in months, in days. You cannot change a commercial decision to set up or to terminate a factory like this.
Right.
So therefore, I think everyone will wait to see, what kind of policy emerges on a stable basis.
How does India's net FDI trend compare with other emerging economies, especially in the last few years, and especially in the context of what's happening in the US, the monetary policies, the more recent executive decisions, also China's economic slowdown? Do we see similar trends elsewhere?
I thought so. I looked at some of the data. I would say that there are exceptions both ways, but by and large, you are seeing very similar experiences in most other emerging markets. If you look at what is happening to FDI, or, put together in the world, as well as FDI in many of the emerging markets, there seems to have been a blip after COVID, maybe because there was a slowdown before that, and now it seems that again there has been a slowdown after that. Maybe it's partly because there was this jump after COVID. Maybe it's because there are more global uncertainties now. Whichever way, but the trends are not very dissimilar.
Understood. Understood. You are not calling this FDI trend negative, but is there something policymakers should do to either make sure that the maturity keeps happening, but this plunge does not happen, or I mean, any kind of intervention that is required? You think?
I think that the services part of FDI is pretty much on its own, because India has, very strong services companies now. And, if they are able to attract FDI on the basis of their, that sector is able to attract on the basis of its track record. Of course, with a lot of that FDI too has been linked to, pure outsourcing. Now, what happens to mass level outsourcing after the advent of AI is something that we have to wait and watch. So that's number one. Number two, when it comes to manufacturing FDI, again, from India's side, the usual stuff like, get faster clearances, make it easier for companies to get land, and so on, clearly remain, in the wish list. That said, I think the employment potential of FDI is shrinking because,
Mhm.
the newer factories are much, much more automated. And I would say that if you were to compare dollar to dollar, a dollar of FDI coming into the knowledge services sector and a dollar of FDI coming into manufacturing, I would dare say that the dollar going to the services sector is probably employing more people.
From a macro point of view, going by this trend in FDI flows, do you think that we should be looking at FDI as a source of foreign exchange build up in the country?
So again, if you see, if you look at outward bound FDI, that was pretty strong in the mid 2000s, 2006, 7, 8 types. Then it came down sharply, and now it has rebounded. Okay, so in a way, the story really lies there. If Indian companies are expanding, then it's only likely that they will keep on acquiring companies abroad, plants abroad, and so on. And then that has to be squared off with whatever effects they are bringing in or not bringing in. Overall, I'm not so sure that the role of FDI in bringing effects is going to change much materially.
Do you think there is a need for rethinking how India tracks and reports FDI in terms of quality and not just quantity?
Well, I think that if we could get a breakup between what is private equity and what is more long term commitment, that would be great. So I think that it's very important to recognize that the way we think of FDI is probably changing, because earlier the whole assumption was that these are less developed countries at a low level of technological evolution, and therefore you needed foreign multinationals to come and set up plants here, bring in technology, bring in better products for consumers, and so on. Now, as the Indian economy is maturing, I think the dependence on MNCs for better products or technology transfer, at least on a pan-Asian basis, is coming off. If you go to the more evolved economies in Asia, like a Japan or a China, maybe the share of foreign companies in the consumer wallet has also come down considerably. So the nature of FDI, so-called manufacturing FDI, is largely now linked to outsourcing. That, okay, I'm getting something built in this particular country because it is making things cheaper. So in a way, maybe services will be driving manufacturing in the India story than the other way around.
So, the FDI free fall could be a momentary shakeout, or it could be a wake-up call. Either way, the world is watching how India rewrites the rules of global investment. That's it for today. You were listening to this episode on The Morning Brief. It was produced by Vinay Joshi, sound designed by Indranil Bhattacharjee. A new episode of TMB drops every Tuesday, Thursday, and Friday, wherever you get your podcasts. Stay tuned for the next deep dive on what matters. Have a good rest of the week.